Hello, everybody. So today I want to talk about MicroStrategy, go over some of the slides in the call, but let me just say that one video doesn't do it justice. It's not going to make it justice. Yesterday, when I was done listening, I posted this, that really it's the best conference call I've ever listened to. That's how good it was. If you listen to a lot of Sailor podcasts, Sailor content, on which I pride myself on listening just about every single one of them, I can tell you that that conference call has a lot of new information, a lot of new ideas, analogies, concepts, way to view the world, and it's almost philosophy on capital. It's almost philosophy on money. That's, I think, how far Michael Saylor is taking us with this journey, and even talking about the philosophy of 42, the answer to everything. I thought that was really clever, and of course, it makes me think of books, like for example. I can't remember his name, but there's a very short book you can buy about Bitcoin, about why Bitcoin is so important because of time, because Bitcoin saves you time. Bitcoin has time, Bitcoin has energy, Bitcoin has permanent capital. I am, sometimes I wonder why I don't increase my position. Well, I know why. Because it's already a big position. And I can tell you the market liked the conference call. The stock is flat on a day where Bitcoin is down $2,000, on a day where everything is crashing. The stock is flat right now. And again, $21 billion at the market offering. That's never happened, except when you do an ATM and your MicroStrategy, you put that money into a hard asset. You don't put that money into an acquisition that may take years. When you issue capital for MicroStrategy, you don't have to wait a few years for that capital to turn into CapEx, factory investment of some sort, marketing investment of some sort, and then wait to get it back for a revenue line, which is taxed, by the way. No, you can just invest the capital straight into the treasury asset, and you have a very low velocity. So I think there could be a video about velocity and what blockchain means for velocity of money, what blockchains even mean for GDP, and what happens if we can change money between hands many, many more times than we currently do in today's economy. There's a lot to learn, so let me just go over a few slides, and of course some of this will seem like a summary, some of this will seem like something you've already seen if you've listened to the call. They've increased their Bitcoin holdings. It's now 252,000 Bitcoins that they have, so beginning into well over 1% of all of the Bitcoin in issuance. Their target, of course, is to raise 42 billion, so 21 billion in equity at the market, which is something that they will likely do when the price to net asset value is a high ratio. Like say if it was like a 12 ratio, they would probably want to do an ATM, and then you're going to have the 12 billion of fixed income equity, and that's something that they will do in the form of their convertible debt. Convertible is the way they've done it, and they hope to do that accretively, taking advantage of very overheated stock price, sometimes to do ATMs, and sometimes when the stock price is trading at say a 2.5 NAV value, 2.5 times that, it may make more sense to do a convertible debt. This company's strategy has been doing well, and Saylor illustrates it all the time. What matters should be the growth in underlying Bitcoin. Just like a bank, one of the chief ways to value a bank is the book value. And you look at that growth in tangible book value and you apply a multiple, a ratio. Good banks typically have a ratio of 2. But the problem is that the asset value, the net asset value for a bank is a melting ice cube in the form of a US dollar. The net asset value for Bitcoin is an ever increasing asset because it has a fixed supply of 21 million. When the dollar is getting devalued, is getting printed, is getting expanded at 15% a year. You may remember my kind of back of a napkin presentation where I was showing you the dilution versus the growth in Bitcoin. Well, they've kind of done their own chart. It was the first time I see this chart for them, and they're showing it very clearly. I mean, this is all you need to see to understand the strategy. You increase the Bitcoin for this year to date. They've increased their Bitcoin by 33.3%, but they've only increased the number of shares by 13.2%. And these share increases, they're not for today. They're not for the stock today. They're for when the convertible debt doesn't get paid off, but gets converted at a pre-agreed price. And so what's going to happen is that you see in 2027 you have a billion 50 that was financed at effectively 0%. That's how much we're paying their expense. It's at 0%, but it will convert in 2027 at 143. The stock is 240 right now, so obviously you would have to be a fool to not convert, and these will convert. But the dilution, you see, the dilution at 143, the $1 billion dilution at 143 bucks a share, that dilution will only happen in 2027, right? 2028 is the rest of the dilution, and so who knows where Bitcoin will be at that point. It's buy Bitcoin today, dilute in theory, but dilute later. Don't dilute today. And they hope to increase their yield. And it's true that 2023, they've had an outstanding year. It's understandable because of the halving and because of 2024, I mean, they've had an outstanding year in 2024 because of a halving. It's understandable. The Bitcoin went really high, really fast, and so they don't pretend that they'll be able to do 80-90% BTC yield every year, but they've expressed their goal, their outlook for the next few years of 25 and 26 and 27 is between 6 and 10% each year of Bitcoin yields. So cut it in the middle, 8%. That's an outstanding yield, just playing with the issuance, playing with the ATM, and playing with the inefficiencies between the market price of MicroStrategy and the multiple of that market price compared to the net asset value. And of course, this strategy has worked very well for MicroStrategy. We now have a look back, and that's why Saylor kind of said that on the call. The stock is undervalued, he said on the call, and I agree from the standpoint of risk. This is now a treasury strategy who's shown what it can do, right? We have a look back. We have a 4-year look back. When they did that, you could easily say, oh, it's never going to work out. It's not worth my time. But now when you look at it, they have beat every single over asset, and they've done a 2x over Bitcoin, and they've also outperformed NVIDIA ever since they adopted the Bitcoin strategy. NVIDIA is, of course, the most talked about stock out there, the biggest business story. Well, there's a bigger business story out there in the form of MicroStrategy, but it's a small cap, and of course it gets a smaller attention, and I guess it's moving into a medium cap right now. You can see the size of Bitcoin is 1.4 trillion. What's going to be the size of that asset in the future? Is it going to be bigger than gold, right? And that's what I think a lot of people seem to be agreeing on right now and thinking about, is that it could very well be bigger than gold. That's based on his model, of course. And I've done a video about the MicroStrategy model and about the size of asset class. And you got to ask yourself, will bonds melt into Bitcoin? Right? Will a lot of the real estate also melt into Bitcoin, and Bitcoin take over some of the bonds and some of the real estate that we have in our portfolios? Well, real estate is a different story altogether, but bonds, right? I always say Bitcoin, not bonds. That's my approach to a quote-unquote stable investment. And I know it sounds crazy to say that Bitcoin is a stable investment today. No investment advice. But I do believe over the long run, this will be the more stable investment. Bitcoin will be that. That's what I believe based on everything I've read about this asset. Anyways, I don't, if there's no need to convince people, you know, as they say in Bitcoin, you get into the asset at the price that you deserve. And of course, this is not financial advice. I'm very impressed by the presentation on volatility, and this requires, I believe, a few lessons. Of course, they are monetizing the volatility. That is what they're doing, and that's why this stock is actually as volatile as any Max 7 stock. As far as the options chains as well, the option chains is very, very high for MicroStrategy. A lot of people look for high volatility assets to fit their different objectives, and he pointed out, of course, the MSTU and MSTX being actually some of the quickest ETFs to raise $1 billion in history, even quicker than Bitcoin. And of course, they're a derivative of MicroStrategy, of people looking for a 3x or more over Bitcoin. And options can be even riskier depending on how much out of the money you want to be. But he explains kind of the magic of a MicroStrategy convert. You know, the MicroStrategy convert is capped upside, but your principal is quote unquote guaranteed. I mean, there's always the binary risk of the company going bankrupt, but aside from that binary risk of the company going bankrupt, you have the floor of the instrument is the debt that you're getting repaid at essentially no interest, but you have an upside that is capped. So capped upside, and a Bitcoin bond is a bond with, say, a capped upside of, say, 30-50%, and downside being eliminated aside from the binary risk of the company potentially going bankrupt. And it's obvious that if Bitcoin goes to zero, MicroStrategy would go to zero. But bond investors are diversified, and the risk of bankruptcy is always taken into account into the models. And depending on how early your bond is and how close to the capital structure you are in your bond, and how early you are, you may even have a more safe profile. So the looking at MicroStrategy like a bank, which you know, I don't know if they're going to be using that word, by the way, that might not fit the ethos of Bitcoin, but that's essentially how I look at it. I look at it as a bank who offers securities, and the main security offered right now is, of course, the convertible, the MSTR convertible, and the equity, right? The equity too is a security, but I believe there will be many more securities. Some of those that I've discussed on this channel have not been discussed by Saylor, right? When I think, for example, they could be on a layer 2, they could like put Bitcoin on a layer 2 and kind of allow Bitcoin to be traded on layer 2, just like Tether allows USD to be traded on Ethereum layers, right? They could do that. That could be another form of instrument where they issue the Bitcoin. But Saylor has specifically discussed some other instrument, including perhaps a class of shares, especially preferred stock, a class of shares that could offer a dividend on MicroStrategy. And that's something that they could either themselves do with a preferred stock, or this is entirely something that an ETF could do. You could have an ETF that earns a yield on MicroStrategy and kind of fits that demand. And of course, MSTR fixed coupon, they could simply do just classic standard standalone corporate debt is something else they could do backed by Bitcoin. And so the value of a Bitcoin as the underlying hard asset of the company, as what makes the company be worth something, the company's worth expressed via Bitcoin, means that you can issue a bunch of derivatives, and a lot of products can be built on Bitcoin by way of MicroStrategy, just like a bunch of products can be built on oil refining operations by way of oil. So a lot of okay, let me rephrase that. A lot of oil products can be built on crude oil by way of oil refining operations, right? A bunch of securities can be built on Bitcoin by way of MicroStrategy's treasury operations. So the treasury operation of MicroStrategy turn Bitcoin into different instruments, including the converts, including the options, including the derivative ETFs based on it with a 2x, including down the road a preferred, down the road a fixed bond. The same is true for oil companies. The oil refineries turn oil, a raw product, just like Bitcoin is a raw product. It turns it into, well, something very simple, very close to oil, like liquefied petroleum gas. That would be the equivalent of what spot Bitcoin ETF is to crypto, right? And it connects the securities world to the crypto economy. This connects the industry to the crude oil, and you can have it more refined. So more refined would be jet fueled, and then less refined would be asphalt, what we put on the road. And all of these instruments have different levels of complexity, but at the end of the day, they are built on oil. All of these securities have different levels of not complexity, but levels of volatility and leverage. But at the end of the day, they are built on Bitcoin. And MicroStrategy sees itself as the refinery that refines Bitcoin into these different securities, just like the oil refining operations here make money by turning crude oil into all of these different products. And of course, the yield is what you earn. Oil refineries earn a profit, and MicroStrategy also earns a Bitcoin yield. It's barrels of oils for the oil refining company, and then it's the number of Bitcoin for Bitcoin. Now, of course, oil reserves. We don't know how much oil there is out there. We don't know. The big advantage of Bitcoin is that we know how much Bitcoin there is out there. And you could even take that analogy in so far, like, okay, so this Bitcoin, we know it's going to be all found. All Bitcoin is going to be found in 2140. Well, could you make a similar analogy saying all oil is going to be found in 2140? I could go on. There's over slight differences. For example, oil is a flow, Bitcoin is a stock. So we could theorize on that and talk about that as well. Anyways, let me move on to the principles. And companies, they like to have their core values, their principles. So what are the principles? And this is the first time he articulates that actually in a neat way like this. Not the first time he does it, but he really puts it in a neat way. So it's all about they're going to hold Bitcoin securely, exclusively, right? He's voiced that forever and ever. He's never going to be buying Ethereum. He's going to prioritize the common stockholder. And so when you look at the different asset here, he's prioritizing the equity. He's prioritizing this. Who he's optimizing for is for the owner of the equity, right? So that's who he's going to prioritize in his management. Treat investors all with respect, etc. They are trying to use intelligent leverage, and it is so intelligent when you take that short on the US dollar and kind of funnel the flows of legacy finance into Bitcoin finance through his game theory. Well, I think that's pretty clever. Intelligent leverage is how he calls it. The yield, right? So you accrete, you dilute, but the dilution is accretive because the dilution is not to do an uncertain acquisition. The dilution is to get your hands on the world's hardest asset, Bitcoin, right? Presumably. So you achieve a yield like that, grow rapidly and responsibly, right? So don't overdo it, although they're going to keep doing it as long as they can, right? Issue fixed income securities backed by Bitcoin. So that's going to be part of a strategy. Maintain a pristine balance sheet and promote the adoption of Bitcoin. Now, the reason why we talk about the pristine balance sheet is because all of the Bitcoin right now is unencumbered, which means that they didn't say they would do that, but they could potentially do it at some point in the future to just use the collateral of Bitcoin as collateral for a loan to buy more Bitcoin, which they've already done before and which they can do again. This is really putting fiat into This is really looking at fiat in the eye and telling to fiat, Well, do you really mean that money is valuable, right? Do you really mean that money is valuable? Because the money, fiat, is created out of thin air, right? It's your promise that creates the money. So you give a collateral, and then new money is created, and then everybody else who owns the US dollar is getting diluted, right? Somebody with a paid for $1 million house goes to see the bank, and they can borrow 600, 750,000 against that house. That 750,000 doesn't come from a saver, right? That 750,000 is an inscription on a ledger. It's a credit that's inscribed on the ledger, and you have to pay it off, and that's your trust, the trust in you that says you're going to pay it off. Fiat money is all theoretical. It's all talk. It's theoretical. It's lines on a ledger. It's not backed by energy like Bitcoin, and they're really taking it at face value and going to see fiat and saying, hey, lend me some fiat against that Bitcoin. Anyways, I don't want to go down in the rabbit hole on this. I think this topic needs more videos, future videos, and I'm very happy about the new viewers. Thank you so much for looking at my channel. I've been talking about MicroStrategy before it was popular. I remember. Anyways, that's okay. So thank you for viewing the channel. How many Bitcoins? I have a few questions that I want to explore in future videos. One of them is how many Bitcoins will they have by year end 2027? Well, that's very tough to tell. I've been reading the stuff of many other creators. Everybody seems to think about 500,000 Bitcoin is about realistic. As always, I'll do a video and I'll try to figure it out on my own and try to not be biased by everybody else. But it's true that with 42 billion of new flows from MicroStrategy across the next 3 years, if you assume no one else buys Bitcoin, well, there's only 492,000 Bitcoin that are going to be mined over the next 3 years. And at today's price, 70,000, 42 billion divided by 70,000, that's only 600,000 Bitcoin. So he wants to buy more Bitcoin than are going to be mined over the next 3 years. And so the buys that he's announced yesterday already exceed the 3 years supply of the next 3 years. So what will happen to the price? Well, in my view, there's only one direction the price can go, because you got to convince people who own the Bitcoin to sell a little bit of it. And, not to use the old Reddit terminology, but if there is such a thing as a diamond hand, I wonder what a Bitcoin holder is. It's way worse than a diamond hand, right? The Bitcoin maxis, the people who are true Bitcoin OGs, as I say, they're not letting go of that Bitcoin easily. And lastly, the last video I want to make is hard capital versus fickle capital at banks. And I thought that was one of the brilliant points that Saylor made. Banks are built on a capital base, which is only made up of paper, essentially, right? Fiat money, paper money. It's all a promise. That's point number one. Then point number two, that promise at bank, that capital on which banks are built, is fickle. It's customers' deposits. It's subject to potential bank runs. You don't have that issue when the capital is fully owned by MicroStrategy. You don't have that issue when it's someone as hardcore as Michael Saylor owning the Bitcoin. You don't have that issue of thinking about whether the depositors at the bank will take away their deposits because of a lack of trust. You don't have to worry about that with MicroStrategy, because MicroStrategy, as one of the CEOs who's perhaps the most quote-unquote hardcore risk-taker, Bitcoin maximalist CEO you can possibly find. Again, no financial advice, but I think this needs to be explored in another video. Anyways, thank you so much for watching. This was not financial advice, not investment advice, just entertainment. Please like, please subscribe. Thank you so much for watching. Follow me on X. Have a wonderful day.